Bitcoin is trading around $113,000, down about 2.8% from highs near $124,000. The total crypto market cap briefly slipped under $4 trillion after peaking around $4.4 trillion earlier this month. This drop is mostly macro-driven from the Fed delaying rate cuts, strong U.S. economic data, plus short-term profit-taking, bull run indicators, ETF and institutional flows. Spot Bitcoin ETFs are still seeing strong inflows even during the dip. Ethereum ETFs recently approved brought billions in fresh demand, a bullish structural driver. Cycle history. Historically, Bitcoin has a mid-cycle correction after breaking new highs before resuming its rally. Past bull runs in 2017 and 2021 saw 30% dips before explosive growth continued. Macro triggers ahead. If the Fed signals rate cuts this fall, liquidity could flood risk assets like crypto. October through November often marks the Q4 rally window in past cycles. My prediction for the bull run: short-term, next 2 to 4 weeks. Choppy, sideways, possible Bitcoin retest of $105,000 to $110,000 support. September, accumulation phase. Altcoins may lag while Bitcoin consolidates. Late September through October 2025. High probability of bull run continuation once macro clarity comes in from Fed easing plus ETF inflows. Confidence. About 7.5 out of 10 that the next leg up starts in Q4 2025. This dip looks normal and healthy in the context of a larger bull run, a shakeout before Q4 momentum. Make sure to like, share, and subscribe.